First of looking at the E-mini S&P, kind of the back story here, the history here. You can see the market was in a bearish structure. It has been bullish. It looks like since about mid-February. You can see the bullish by the green bars moving up here. That's based on the market structure. By the way, if for the first time visitors, what you're looking at is our reaction point timing indicator. It is on the NinjaTrader platform. And we are having a spring special. You guys might have seen the emails coming out. So it is $100 off here for the next 2 weeks as a spring special. So that's something you might want to consider. Okay, it has been in bullish structure. That is identified by the green price bars. You can see the market traded right along this median line. That's kind of our momentum line, and it was perfectly here. And then you can see that the market right here shifted and it was trading below there. That suggests a loss of momentum. And of course, what did it do is it traded right up into this gray area. That is a reaction zone. I'm going to step it back just. That's not where I wanted to go. Okay, we'll go back here. And it went right up into the gray zone. So right here, early in the gray zone, that's where it put its high in. But also one of the key points to remember here is, okay, right, I mentioned this median line, but look right here, it touched it, and this time it didn't. It left a space between it. That's a line divergence. That's suggesting the market is weakening. And so that really gave you a heads up right here. It's pulling away from the median line. It's weakening right inside of this projected reaction zone. So there was your heads up that the market may be turning down, or the trend is ending, or even going into a correction phase. Right now, it looks like that's all we've done is moved into a correction phase. I'm going to blow this up so you can see it. Because look at here, okay, we left it, and the market did exactly what we expected. It traded right down, and look where it went, right into the center of this reaction zone. This was the A reaction zone, as you know, is the most important. The B, we typically get a reaction, and it did happen, the A reaction zone. Now, it's interesting because we pulled down here, and you made the low early. And that's okay because you made the high early. See how the high was early in there, the low was early in here. And then the true reversal day, reaction day, was an inside day. Now, typically the trail day here, open here, close here, that is typically a bearish indicator. That is a bearish indicator here. But it's only bearish if that low is taken out. So far, that low is not taken out. And TJ, you're asking, what is this red line here? Okay, that is what I call my price flow indicator. It essentially is a 20-bar exponential moving average, but we also have added a little bit of our own proprietary stuff, so it is a little more price sensitive right at the change of trend here. And so that is offering support. That is offering support. So right now, if you look at the overall structure is still bullish because you can see that by the green bars. The PFI, if you look over here, the PFI is in a buy, so it's a strong buy. And it's strong because that says that the other time frames it looks at, because this PFI, what it does is looks at 2 other time frames and then kind of gives you the strength of the trend. So it says it's in a buy. Also down here, this lower parallel line, that is going to offer support. That is offering the support. And TJ, as I was just saying here, the green bars are bullish. TJ was asking, what color is the green bars? This is our indicator. What it does is it looks at market structure, and based on the market structure, it will tell you whether the market's in a bullish mode or a bearish mode. You can see by the gold bars, this market was bearish all along. This means it's in a bullish, the market structure is bullish. So it does that for you. You're running into support here. So the market is going to find support. It found weakness up here inside this reaction zone, and now here, reaction zone. Now, just the price action suggests that we can continue sideways to a little bit lower. That is only confirmed, like I said, if yesterday's low was taken out, then that should show us a continuation to the downside. We're going to see how this support holds right now. Oh, but overall, you have to look at it. The trend is still up, and the market is trying to find some support right here. If this support holds, then I will start looking at maybe another long position, because you can see we have a pivot right here. That's a confirmed pivot. We do not have this as a confirmed pivot low yet, but if it does get confirmed a pivot low, then of course, you know, this green diamond will move right up here. The red diamond will move here, and this will be a brand new reaction swing. And then the reaction point will make a brand new time and price projection based off this time zone here, you know, the reverse count. So that's what we're watching for. So I think today is kind of a critical day on the EMA and the S&P. We'll watch it, and it may give you an interesting thing here. Well, Mark, the reason you're saying the Dow and the S&P, the Dow and the S&P will not have exactly the same reaction days, because they have tendency to travel together, but they won't have the exact highs and low closes, because you know everything is based off the closes. The points here, we look at the closes, because the closing price is the most important point of the day, and they will have different closing prices. We'll actually look at some, matter of fact, I think I may have. Look here. I think we may have the Dow up here. See, there's your Dow. This is what you were just talking about, the mini Dow. See, that one, look how that traveled right along here. That was nice. That was all the way along here. We had right here, see how the market had an outside day right in that reaction zone, and this was bullish. See, that was a bullish reaction, and this trail day was bullish. Right there, the directional indicator, that told us we would continue higher, and the market did that. And so right now, we're using this reaction swing, and you're doing the same thing. You're forming a little possible buy. See that white line right there? That says reaction points identified that as a buy point. You can overlook at the left. It says signal pattern buy. Well, that's that buy right there, and it's finding support right here. So we're doing the same thing. We're looking at this. So the structure is bullish. The PFI is bullish. You can see PFI is in a buy mode. It's moderately bullish. And right now, so that looks like really you have to look at this as a continuation to the upside. Everything says this market is going through a little bit of a correction phase, and it's getting ready to head higher again. And that's the way you have to look at it until the structure and the patterns tell you differently. Okay, we're looking at the NASDAQ right here. Pretty much the same thing. It has been trading above the momentum line for quite a while. Look how it found support right here. It is starting to move a little bit below. It can do this. So it right now is into a correction phase. Right here, if it takes out that line, that's where you resume the upward trend. No, Mark, you don't need to make any adjustments with that. So overall, you're looking at the stock indexes. They're going through a little bit of a correction phase. The Dow and the S&Ps are near support. You can see the NASDAQ is checking out the PFI, so you may have a double cross. The PFI is strong upward. So all of them still look like they have a chance to head up. And if we get this new pattern signal, then that tells you the advance will continue. Okay, I have the bonds up here, but I want to look at the notes more than anything. The bonds are still bullish, but when you start looking at the market structure, I just wanted to show you this. You'll find it's interesting. You look at the market structure, you can go here, or I can even go like this. This is one thing you want to look at, because it kind of shows you just visually the momentum, how the momentum is changing. So you here see that trend. I'm even going to go just to the close there. But then you go over here, look how the trend right here, okay, the market's moving up, but it's losing momentum no matter how you look at it. See how it's trading below there? So there's some weakness coming in there. And you've gone up, and you can see that I marked when I look to the left, that market has hit that area that is a resistance. Now, it is still an upward trend, so you don't want to sell it yet because there's no pattern that says sell. Right now, it's kind of more of a sideline, and this white line would have to be penetrated before I would say this trend will continue. And you can see, or looking at the T-note, I like the T-notes better. We have a TR pattern here. You can see how it's marked with a down. That was a bullish TR pattern, which really kicked in a buy right here, right around about 129.16. That was your confirmed buy. And based on the forward and reverse count, we were looking for it to move up here. We have actually 6 more bars. The count is 6 more bars, which puts you into the 19th. The 19th, and based on our time and projections, we're looking at a target right around about 132.05, 132.08. The market is going through a little correction phase. That right now, that's okay. That's basically typical action. You can see that a nice new swing pattern is forming. We have your 2 lower close, so this pivot's confirmed. That's why your white line there, that is your tentative buy signal. You can see right here, pattern buy. That's what that line. So if that market comes back and takes out that, that's your resumption to the upside. TJ, you're saying, is this always on a daily time frame? Okay, I use a daily time frame when I'm doing this because I do these webinars. I only do them twice a week. I do them Tuesday morning and Thursday afternoon. So if I went to a intraday, it's not, I can show you what's going on that hour in the next couple of hours. What we're looking for is setups for the next few days. Now, if you look at these patterns work no matter whether a daily chart or a 5-minute chart or a 30-minute chart. There are occasions when we see opportunities, we'll drop down and we'll look at some intraday charts. Okay, but what this is this is telling you, giving us some setups or trading ideas for the next 2 or 3 days. And so right now we're looking at this market to go up, and you know what, TJ, if you want to look at a 5-minute chart, we'll look and see what's setting up right now on this area. Okay, right now, look at this. You have a failed swing pattern here. The market came up, failed, and look where it did. It made this low right inside the projected area. That's where it projected the reversal will happen, and this mark is coming up. When you get a failed pattern here, this could be setting up the end of it. So you have your failed pattern right here. Market will typically come back here, maybe form one of these and start heading higher. So if you go to, and I'm even going to drop up, let's go to a 15-minute time frame. That even shows it better. There's your swing pattern failure. That's a pattern we watch for all the time, right inside this reaction zone. So if you go and now you swing back here and you look at the daily chart, that tells me I can watch this for a possible bottom in here. And if I get a confirmation, then I can, if I'm waiting to enter a long position, I can enter it sometime here today with a pretty good assurances that this little correction's over with and this market will resume its upward trend. If you want to see another swing pattern failure, let me bring here. This is the gold. This is a 5-minute gold chart. Swing pattern failure, that's that pattern we talk about a lot. Look at this right there. Look how it was an upward trend, came up here, this breakout, came back and closed inside here. There's your first red flag that there's a failure, and then right here, this failure here, that triggered your sell signal coming to the downside. And we're trading right down into reaction zone. So that's just a little indication of your failure pattern that I just showed you on the T-notes too. A pattern we use a lot. Everybody should know that pattern. Okay, what are we looking at? Dollar index. All right, look at the dollar index. It has come right down. This is where we looked for. There's the A zone. That completes the cycle. That is the reaction zone we were looking at. And what do we see? And the market came down, made a new low, and moving up. Also, what else do we see? Right here's your momentum line. Look how it touched right here. Look how it moved away. So the price action itself is telling you that there is support coming into the market. This market's getting ready to reverse. You're taking out the top outside day, so that's bullish. And just, let's proceed what we did just a while ago. Let's look intraday. What do we see here intraday? All right, TJ, look at this. This is what we're talking about. This, how that pattern there is your TR pattern. On a 15-minute chart, it triggered a buy right there at 94. So if you're looking inside there, that will give you signals. But the thing is, you need to know when to watch for those signals. So how do you know when to watch for that type of signal? Well, right here, it's inside the reaction zone. That tells you you can drop down here. So actually, you could have stepped in and bought that at 94 with a pretty good degree of confidence. A TR pattern is a trend reversal pattern. And you know what? This brings up a point because TR, I mean, TJ, you must be new here. And so, like I said, welcome. What we're talking about here, we have two pattern sequences. We look at a TR pattern, which is a trend reversal. This typically happens at major turning points of the market. The other pattern sequence we look at is called a TC pattern, a trend continuation. And we teach all this. The reaction point was made to help you apply all this information. We teach this in a 4-hour session. What we have what we call an educational session, which I will be starting a new one probably sometimes towards the end of May. So I'll start making the announcements when we're going to have that available. So that's what you'll learn here, and that's actually what the little diamonds here identify, TJ. When you see these diamonds, it identifies to you which pattern we're using, and what it's using is the time price projections. That's how we project these reaction areas. So hopefully that kind of gives you an overview of what we're talking about here. Looking over here, we're going into the euro currency. Same thing. Look at the euro currency, and what we're talking about a swing pattern failure is when we have a swing pattern. A swing pattern is just a day here, and here's a little swing pattern, and then the market breaks out, just like here, it breaks out, but fails and comes back here. That is a signal that we use that there is a reversal coming, and especially when you get like an inside day following, or it happens inside this reaction zone. Look how this market came up here inside the reaction zone. Here's the trail day. The trail day is a directional indicator based on how the market closes compared to the open. Right now, this is a very bearish indicator. Also, we have a failure. It's taking out these lows. That tells us there's a high degree of probability that this is a top in the euro currency. And once again, I'm going to drop right down here, looking at the 15-minute chart. Look at that. See, there's your failure. Look how the market right here was a warning. It says don't do it. But here is your first signal here. That's when, so really about 114.30 is where you triggered it. And it's coming on down. And you could even drop down to a 5-minute chart, because that's what I do. When I get these, I'll drop down in here. And I'm just going to walk this back. Because what you're doing is you're able to walk it back and look at previous signals. Right here was you asked about a TR pattern. There's your TR pattern. Let me right here. TR patterns all drawn out. And right here was your sell, about 114.40. The market structure turned bearish. Came back, retested. This is a little double cross pattern. It retested the PFI. The PFI was down, structure's bearish, and then you had what we call a double cross here, one here, one here, one here. So those are some classic examples of the techniques that we teach in this educational session. And as we said, this reaction point was designed to help you apply those techniques. PFI, price flow indicator. That's based off price action. Remember, the color of the bars is based off market structure. The red line is based off price action. Okay, so that kind of shows you what's going on there. Let's go. All right, the British pound, if you guys are with me before, the last couple of sessions, we talked about the being short the British pound. First of all, you had this line divergence that did trigger in a move down here. And this inside bar occurred. I was looking for the market to take out that low and continue. I actually had a target down here. And this kind of, once again, goes back and reconfirms to me the strength of these lower pair line, the support. Look how that support held, and the market actually did not go down. So that's one. Let me go back here. I'm going to step it back. There, I was looking for, and the market did not go down. It made a little low inside this reaction zone, went up, made a high close inside this reaction zone. So now we're looking to maybe get that continuation to the downside. I still look for this market to come on down because of this market. There's price action up here. We went up, made a high, and we know that if the market moves higher into this reaction zone, we look for it to turn lower. That's exactly what's happening here on this British pound. So we'll still look for this to come on down. And we look at another currency here. The yen. Look how the yen completed still. And remember, this is kind of a wide reaction zone. That's because the B count and the A count are so close. So that's a cluster. When you get a cluster like that, that makes the reversal more powerful. So here what we did is the structure was bullish. It went right up in here. This line we put there, that was our price target. That's a reaction line target objective. The market came up. It hit the median line, the sloping line, right inside a projected reaction zone. So right there, everything came together. So that was where the time came to exit your long position. And at this point, standing aside because the market structure is still bullish. Now, your PFI is way down here. And you guys know what that means. That means the market's out of balance. And you guys say, what does out of balance mean? Well, look, we'll go back here. Look at the PFIs right here, and the price is up here. PFIs here, and the price is up here. So what happens whenever this happens? The market's out of balance. It's going to come back towards this PFI. It's going to come back towards that. Come back. It's got to get back in balance. So either the market's going to stall up here while the PFI catches up, or the market's going to correct and come back to it. Well, that's the same situation here, and now it's starting to stall. So it's out of balance a little bit. And therefore, you're going to come back and correct. But everything came together right here, and the market is starting to pull back, just as expected. So you knew that was going to happen, and there it is. It's unfolding for you right now. So I'll look for this market to be in a little bit of a correction phase. We'll see if a new pattern sets up. Here we are, the Australian dollar. I've been talking about that because it's setting up a potential TR pattern right here. You had your swing pattern failure right here as the market went up and failed, where it fell right in exactly the middle of this reaction zone. So that was the projected reversal area. It did exactly what we thought. The market came down, and typically, I had this as kind of a target objective. It did not quite reach that before turning back up and make this correction. So look at where we are. Right here. We're just going to add this one more thing. So it hit the 60% retracement. So this is your selling area. This is your selling area. TJ, yes, it does. Yeah, I have people that have used it in Market Replay to go back. So you can do that. This is your area right here. So this is kicking in a sell. Right? And of course, if you want, Once again, this is a great place to drop back and look at your intraday to see if you're getting some kind of a sell pattern. And look what we got right here. A failure. This is actually what I call my 4 to 7 trade. I haven't talked about the 4 to 7 trade a little lately, but that qualifies a 4 to 7 trade where you have a sideways channel early in the morning, and then between 4 and 7 o'clock, the market will break up and fail, and then we always go in the direction of the failure. That's put in down here. So intraday, you had a nice sell in there. So we'll look for that to turn out. It's still up here right now, so it has to be to confirm the pattern here on a daily. You want to see it trade below here, so that's what we watch for. The Canadian dollar, I was looking for a failure here. We did get a little bit of trade off the failure here as the market failed, came down to this area, found some support, but the PFI held it. So you have a double cross, nice double cross pattern here, a bullish double cross here. PFI remained bullish, structure remained bullish, and there we go, the trend continues. So that's just a great example of how the trend will continue. You want to go with the trend until you get a confirmation that has changed. And therefore, we were looking for a possible confirmation, but the overall trend remains intact. And that's sometimes that trend is hard to change. And here we are moving to new highs on this. And it looks like that should move up. Well, your 6 bars, that puts you up into the 19th again, just like some others we looked at. Okay, now the crude oil. Sometimes you have to be quick to change your opinion based on the market structure. Because before, I was looking for this market to move lower. Okay, you got a TR pattern. And although the TR pattern was in the middle of the trend, basically the most TR patterns work better if you're at new highs or new lows. But also you can get a nice TR pattern after you've made a 60% retracement after a significant price move. Well, I didn't quite get that, but we had a TR, and look how the market came down. But I guess the market was already telling us that. Look, we had a sell right here. But the blue bars were warning. And what do I usually say about the blue or red bars like here that says, don't buy here, wait for the market to correct up. Correct, and then buy. So in that case, see, you would have bought here. And that's basically what it's saying. It says you don't want to buy here. This is a don't sell. I mean, don't buy here. This one says don't sell until you get a 2 to 3, at least a 1 to 2 bar correction. Well, you never got that. And then all of a sudden the market rallied like this. And the structure turned bullish. And as soon as it took out this area, that turned everything. So now what do we know about this? Let's look at the long term. Well, first of all, you have your action. Then you have your zigzag or your A, B, C continuation pattern. We know that this pattern there typically means the center of the price move, the longer play. So if we're really looking at this overall, longer term, that suggests the market could move up this area, and you've got a long time for it to head higher. It should head higher. Typical market action, though, what we'll most likely see is, of course, the market's pulling up here, and that's one of the 5 trading principles we teach, that this market will reach this median line about 80% of the time. So you're going to move up into this time. You'll probably test that median line, and then typically you'll get your correction back. And that will be another buying opportunity because that will be moving out a little TR pattern after the ABC, and then we'll look for it to move up. So that's kind of the longer term projections I'm looking at the crude oil. So first of all, I want to go up and I want to see it meet this median line and then do your 2 to 3 day correction. So because this does suggest that the market has turned bullish longer term. Let's just even go into a weekly. If you go to weekly, let's take a look. Look at the weekly. That is a nice pattern because you look here, what do we have? That's a beautiful TR pattern. Okay, I'll go to the forward here, not quite here. What we have to do is right here, this low would be the low close. Now it's not confirmed yet because we have to have a weekly close up here. It looks like we're going to get it. And if that's the case, then you have a nice TR pattern, and it's great because look, you've already taken out this pivot high. That suggests a change in structure. You had your red bars, you've already got your pullback here, so it's okay to step in and start buying this. So there is a strong evidence that suggests that we're going to have higher prices on the crude oil. So that's one thing to keep watching for. We will continue to watch that. Just more evidence of this. This is the heating oil. Once again, same thing happened here. Now we have to look at here. It has reached this line here. So it's already reached. It's taken out this area. So if you get a 2 to 3 day pullback, we're going to have a buying opportunity this. And you have your action. And now we're looking for a reaction here. Now, RBOB gasoline, now it had a failure like right here. It went through, you can see how it went through the whole thing right here. You know, you went here, you had your patterns, and then there was your failure here. So that completed the cycle. The upside failure came down and made this low. The low close was right inside of the A reaction zone. So it made a high in the B zone, the low here, took that. Now this market's headed back up. So it took out this low. It'll probably come up and take out this high, and then we'll get a little correction. So I'm going to have to wait for a pullback, wait for a pattern on this one too. So, but now, like I said, I was bearish, but then I have to change that. As soon as the market structure tells me differently, I have to change that. So I was looking for that to come down quite a ways, but it certainly changed very quickly. Now I'm looking at the natural gas, and I am just like the signal pattern up in the left. I'm neutral also. It's just, it could go either way. So I don't have, you can see that we had possible, you know, it looked like it may go somewhere, but it never really went. You had this swing pattern, you had this swing pattern, and it failed to take out this high. So it's never really triggered anything here now. So it's more of a sideways. I have to wait for something to happen. So I do not have any kind of opinion there. Okay, the gold. As I mentioned before, I really wasn't doing anything with gold, but my overall bias was still bullish simply because of this structure, the way it had this lined up, the market gone through. And I think I've talked about this little pattern right here at this the center line. That was kind of the center of it. And the markets have been struggling. I was thinking you may get a little ABC here pattern. This is not a true swing pattern, or you could have a TR heading up. But it looks to me like this market's getting ready to resume. The PFI is turning bullish. The structure's turning bullish. So I did add this extra little pitchfork. So I think this market is in an upward trend, and I'm getting more and more bullish. Especially I like this little inside bar right here. That kind of gives me an area to step in and start buying here. That was on Monday here. So I'm actually looking, I'm on the long side here, and I think this market can continue on up. You may want to drop down into some intraday patterns here if you're looking to get in, and maybe give you a little more precise point, because right here the 15-minute chart looks a little bit negative right now, so you could drift a little bit lower. So if you're looking to get in, maybe hold off and wait for an intraday pattern here. Same as silver. Now I admit I missed this one. I mean, we had this big bar down, and then you had an inside bar. So now sometimes it's not as obvious, but you go back and look at it now and you say, oh, at least I do. There's your pattern, drop down inside bar. There's your swing pattern failure right here. This is when I should have known it was turning back up, because your breakout bar, inside bar, and then it took out the high and wished up. So I missed that one. Right now, you look back, it's obvious. It should have been there. And this market's moving on up. And let's see here. Have we taken a look at that? See, you did make a new high. It should come up to this median line here before you hit any kind of resistance. So I do look for another 10 to 15 cents up on this thing. Okay, on the metals, first one, look at copper. Look how copper fulfilled. It came right down. It crossed here, and then it accelerated the downside. So typically the target line would have been right here, but because you had this close, this close, this close lower than that, you were able to lower that and anchor it on the lower line. So that extended that target objective right here. This line gave it support inside the reaction zone, and the market reacted as expected. That was the low. Inside bar, turned back up. So we're going to come up, and it's going to test this. It should test this median line, and then we'll see what happens at that point. The structure's still bearish. Actually, look, you can turn it neutral. The signal pattern is neutral. There's no signal pattern. The structure's bearish. But once again, this market was out of balance. So there, the price was right here. The PFI is right here. So now it's correcting. See, just like here, the market corrects. Every time it gets too far out of line, right here, the market corrects. Right here, market corrects. So that's another thing. You're out of balance, and you're seeing this market came up. The white line is, this is a sloping reaction line. That's how you project your target, your price target. The gray areas is a time target. Somebody asked me what the white line was, see? And this line right here is your price target. So that's the ideal, is when those two come together. That is time and price matching up. So that's your reaction line target to project price. Soybeans, moving into the grains. Okay, based off the TR, I'm going to go way back here. Just say way back here. There was your TR pattern. This was a nice TR pattern because look, this right here, swing pattern, actually occurred above this area here, found support right on this median line. There was your bearish trail day, bullish here, and markets moved on up. It surged from here, and now you've gone through this upper. You can see I've extended this. I'm looking for this market to continue higher for 3 bars from now. So that puts you Tuesday, Wednesday, Thursday. This will be the project reaction day is on a Thursday. So we're looking for this to move up. That'll be a great one. We can talk about on Thursday and see how this worked out. But you had a nice move up. Also, you look at what we have here. Beautiful double cross pattern right here. Now this market double crossed. There was, and then not only a double cross, but look at this inside bar. Here's the inside bar. You took out the low and then took out the high. So just right there was a buy signal bullish. So the structure was bullish, PFI is bullish, bullish double cross, and then a bullish signal on your inside bar. So there are a lot of things for this market to push higher. Okay, I don't need that line there because it's already, he reached that. So we'll see if this market can drift higher into here, and that will complete the cycle. So, and if you're looking at target prices, we've already probably reached the target. So if you go like this, okay, so based on that, you can go a little higher if you go in here. So there's your target line. So this market can drift a little bit higher and see if it hits that reaction line target. And if you go, well, look at this, the soy meal. I talked about the soy meal, and at that point, I really didn't have anything, but you can see that that came down and it roared from there. So I missed that one. The market is moving right up inside this reaction zone, should come up and maybe test this line. So looking for it up to around about 288 to 290. So right now it's right around 24, about another $3 to $4 for this market to move up. TJ, inside bars can be very important. It depends on where they are in the trend. And okay, so because we look at inside bars, they can be a great indication. Um, like this pullback, the inside bar will usually tell you that the correction is over with. Look at this, inside bar, market moves up. Inside bar, market moves up. Right here, inside bar, this is at a swing pattern failure. So we look at them inside swing pattern failures, and we look for them inside trends. And we use them differently based on that. That is something that we teach in this educational series that's coming up. An inside bar basically is a rest area. Sometimes I've told it's just basically where the bulls and bears are undecided, or it's resting. They're waiting for something to happen in the market, and then you can see then it can happen here. There's an inside bar, took out the low, took out the high, buy signal there. So on the bean oil remains bullish. It hit the target right up here. If you remember, there's right here, and it came down. Median line, PFI right here, so that's very important. Market structure is bullish. You're moving into a reaction zone, so I look for this market to continue higher. You have to. The structure is bullish. It's finding support. So what we have to do is see if this support holds, then that will give us an indication of we have a brand new price advance off of this line here. Brand new price advance here. Yeah, see way back here, that puts you up here. See how it came right up in here? It did that before. I just wanted to show you. See how it came up, hit this area, came down, where to find support. Formed a bullish reaction swing, moved higher, come up here. And of course, that's the reaction swing we're using now. So, and you can see, it's starting to turn bullish. This is a time you can start dropping into an intraday. Once again, I'm just using a 15-minute. Starting to form a little bullish pattern. Let's drop down into a 5-minute just for the fun of it. This consolidation, that to me, that's an energy pattern. This market's starting to build energy for a move higher. So that tells you there's a high probability that this is going to, yes, the white price, those lines get drawn automatically. No, wait a minute. The white price bar, TJ, which I'm not quite sure. Are you talking about the sloping line for the price objective? The reaction line? Those are not drawn automatically. You learn how to draw those. That's one thing we teach you how to do it. Because like I said, this will help you implement anything, but it does not trade it automatically for you. And the reason we do that is I'm a big believer that the trader has to be part of the decision process. You understand the methodology, and then Reaction Point helps you apply it. It does a lot of the work for you, but you still have to make the decisions. Here we are in the corn, and the corn is a lot like the silver that we looked at. Look what happened here. All right, we dropped down, made a new low, and this was not quite an inside bar. It actually took out the low and come up. So I have your failure, and it came up, and the market now is starting to turn bullish. So this basically, This bar is kind of in control. This is the low, and looks like we are trying to turn bullish on this market right now. I do not have a signal on it. I will wait to see if we do get some kind of a pattern here. You can see that we're neutral on our signal patterns. That says let's wait for something a little more positive. The thing is we always talk about is wait for the patterns. The patterns will come, and don't force them. Sometimes people have a tendency to guess and say, oh, it's going to form. I want to get in early. And I found that, sometimes I would rather wait for a strong confirmation, and I'll get a little less of a fill, not quite as good as a fill. But if you have a stronger confirmation, then you're better off overall because you get into the better trades. Wheat market, failure. Failed right inside this reaction zone. You're sideways to lower, moving down into this reaction zone. It does look like there's a possibility that you're going to come down and take these lows out. It could do that. You can see this is kind of a mixed bag. The signal pattern's neutral, and I can see why it's neutral because first of all, if you look at the price bars, look at there. Okay, bearish, bullish, bearish, bullish, bearish, bullish, bearish. So it's really kind of, it's undecided. And yeah, Mark, you're saying inside bar, but that's so far. I mean, we're early in the trading day. We'll have to wait and see what happens there. But my guess is this market's going to drop down, take out this low inside this reversal day, and then we may have a buying opportunity here. But as of right now, to me, this is a sidelines market. Okay, on to fix this one here. Right now, the hog market, oh, this is the cattle. The cattle, you had the TR pattern here, TR pattern, and the market moved down. Let me get rid of the cross. Made a low close. The lowest close of the move was right inside this reaction zone. Inside bar. The market took out the low of the inside bar, came up, took out the high. So that pushed it back up. But overall, the structure is still bearish. And it's very interesting because you had this low close, but right now the market's finding support. So even though the market structure is bearish and you had this outside bar here, this could be a possible double cross. But to me, it's not that until it takes out this low. So for this to resume the downside and for me to get back in the cattle, because I'm sidelined here, the market would have to take out this low. If it does that, then I look for a resumption to the downside. If not, then you have to wait for it, more of a sidelines move here. So it's trying, but you have to wait for that pattern confirmation. Okay, just wanted to update this here, and I have double cross, possibly. But it's just like I'm talking right here. There's the mark. There's the bar that touched that. So I want to see the market kind of take out that low. So right here, if it takes out that low, then I'm looking for this resume its downside here. Structure's bullish. I mean bearish. Excuse me. Structure's bearish, and you have a sell right here. And so you could have one more downward thrust on that. Right now, inside bar, rest, undecided. You can see this was an inside bar too. So that's kind of the way I'm looking at the hogs too. So both the cattle and the hogs are right there, tentative sell signals, but to me they're not quite confirmed yet. Okay, looking at the coffee. I'm going to step back here. That is why I'm looked at the long coffee. And Mark, yeah, we'll revisit the 30-year bond before we're over here. You see how this coffee came right down. First of all, it reached the 60%. Secondly, inside the B zones, it says don't sell. And right now, there is your lowest close, right in the middle of this projected reaction zone. And there's the trail day. See the trail day? It took out the low, which is good. And then it came up and closed higher than the open. Okay, so that you can do. If you want to be aggressive, then you can stick a buy right there. It did trigger and moved on up. So this market, I think the retracement's over. I got a little aggressive with the coffee. Got in long side now, holding alongside, and you've made this retracement, and so I'm looking for a resumption of the uptrend here. Now, it might be a little early to start throwing my pitchfork on here. But I can actually do this. I'll do the manual count here. Let's do that. So it's not good right there. Well, there we go. So that puts you out here. You can see that if this is true, then you have a pretty good move up on this coming here. Here's the cotton, and I believe I said in the last update, I showed you this pattern right here, and so I was bullish on the cotton. Look how right here it broke through and triggered, and we've moved on up. Nice rally here. We should continue to move up here 3 bars from now. That'll put us into Thursday. We are testing this upper line, but if I can put a target price here, so I can put, and since we're trading above that median line, I'm going to anchor it right here. So I'm putting a target up to around about 62.50 on this cotton. So we're looking for the, but that's nice breakout here. Market turned bullish, nice bullish structure. Everything looked real good. So I look for this market to continue on up here. Now we're looking at cocoa. Okay, I had an objective. You remember, I thought this market was going to come down and test this low. It is still very bearish right now. We've had, there's your TR pattern here. This was a nice TR pattern. Let me get this. Drawn out here like this. See the right here? It says don't sell until you get that. That sold. You came down, you made a low inside this zone. And now you've gone up and you've made your high right in here and also up the PFI. So you are getting that reversal that could give us a continuation. I have this dotted line. That's the confirmation of this continue. So if it takes out that area, I would probably step in and sell again and look for it to come down and take out this low. So that's what I'm watching for. The market moved higher into this A zone. That tells me there's a very high probability it's going to turn lower from here and resume the downward trend. Once again, if you want a bit aggressive, you can drop in here. We'll look at a 5-minute. Not a lot of volume there. Let's drop in here to 15. Okay, so you're looking there, yeah, you're getting basically a sell here. That's confirming the downward move here. Sugar. Now, right here, see how the sugar came down and it was inside this A zone. And that was an inside bar here. The blue bar said don't sell it. I mean, you don't want to be a seller here. It did drop on down here. It took out the low and come down. Now you're finding it to 60%. I don't know what it's going to do. I have to stand aside. Have not done anything with sugar, and I'm not going to do anything with sugar until I get a better pattern to fulfill me. I mean, to give me an idea what's going on here. Okay, so I think that is, we had a request to go back and revisit the bonds. Let me go to the 30-year bond right here. If you remember, these lines here, I was talking about the slope of the market. So that tells me that it's not matching this slope here. That's a market that, even though it's moving up, it doesn't have a lot of strength to it. It's running out of steam. Even if you put this on here, see, so you're trading on the lower side here, starting to break to the downside. You have your buy there. As I remember, I liked the T notes better. I like the T notes because it looks to me like there's a little strength here and you're forming a possible bullish pattern here, but it has to take out that white line to resume its upward trend. So right now, the 30-year bonds look a little weak. The 10-year notes are bullish, but they're going through a correction, and I'd have to confirm that's turning back up before I'd enter on the long side again. Thank you, Vanessa, for that. She was commenting on how I've been covering a lot of the basics here today. So actually, it's very good when you guys ask questions. So I do appreciate those questions, you guys, so I can go back and kind of review and hopefully show you guys some of the things that we're doing here. Before we go, I had a request for the E-mini S&P. Let's take a look at it. Now this is an excellent one. Right here's the daily, and remember we talked about how it's coming in right here in this reaction zone, support here. We're going to see if this market's going to turn higher. The structure's bullish, PFI's bullish, finding support at the PFI in this lower line, and heck, let's do this. So there you had your little failure on the downside. That's on the 5-minute chart. I'm going to go to the 15-minute here. See, once again, look out when you get a failure here. So this basically was looking at failure and come up. You want to go in the direction. So that tells me that I want to look on the long side here. On the long side. So that tells me I want to start looking at the buys here. Okay. So I am looking at a 15-minute, 30-minute chart. Yeah, it looks like this market's getting ready to turn to the support's going to hold here. And Mark, you're asking, you said, can we see a recording of this great class? This class is being recorded, and I will post this recording. I will have it on the Traders Network website. You'll have to have your codes to get in, and then go to the TMV, and you can click it right there. Also, if you guys receive my email newsletters in the afternoon, there will be a link in there also that you can go back and watch this and record it. So, and I will leave those links up for the next few days so you guys go back and revisit this. So I do appreciate you guys coming and doing it. And like I said, asking these questions, that's good. Hopefully it helps everybody. So that's great. I thought it was a great session. We're running out of time here. So join me again on Thursday afternoon. And we'll have that up here. Mark, before I go, you said, how do I get the code? Let me just show you here. Right here, you can call this phone number or email John at Traders Network, and we can get you signed up. We give you a 30-day free trial, and we give you a code with full access to all this information, okay? And like I said, be sure to join me on Thursday afternoon. I will send an email out on Wednesday with the links to register for this class. That way you can go back and check on the things we talked about today and see which ones worked, which one didn't. Okay? So again, I do appreciate you guys taking an hour out of your day to join me as I go through the markets and kind of show you this information. And if you do have more questions, you want to learn more about this, give us a call or email me and we'll tell you how you can do that, okay? Until Thursday, everybody, I want to wish you good luck and good trading. Thank you.